topic for today, where a lot of buyers and sellers are pretty hesitant about the market. It's a question we get quite often, so I think we figured it's a good topic to explore. So
Yeah, exactly. And we'll be talking about Calgary because that's the market we know. Obviously, you can extrapolate that to some other market in Alberta, but we're not going to be touching that today. If you have any questions, feel free to ask in the chat. You can also ask at the end. We'll have a Q&A where you can ask extra questions you might have, but we'll try to answer as many as we can as we go. So we'll get started. So just to start, obviously, we're giving an opinion here. Make sure you do your due diligence before purchasing any property or making any investment. So what does our current market look like? So I've pulled some stats here from Calgary Real Estate Board. We're looking at some interesting things right now. So these stats have, as of September, which are the last available stats we have. We're still about 10% increase over last year at same date. So that's important to note. This is on the benchmark price. Now, the benchmark price is the price of a typical home in the market. So it's not the average price. The average price can be a little different because if a month there's more expensive homes that sell than another month, that was skewed at. So the benchmark price is a very good way to look at trend over time of a given property. So yeah, like I said, we're still 10% over last year. And we'll talk on the next screen a little more about what it looks like since our peak in May, because we did lose a little bit of, we did drop the price a little bit. The days on market are getting a little higher. That's compared to last year. I know it says an arrow going down, but that's actually 11% higher than last year. But supply is dropping. And the reason why supply is dropping is even though there's less sales, we're also getting less listings on the market. Something I wanted to point out as well, something called the sales to new listing ratio. So to consider a market, a buyer's market or seller's market, which is a saying you might have heard before, usually we're looking at anywhere above 60% is considered a seller's market, and anything below 40% is considered a buyer's market, and everything in between is what we call balanced market. Well, even though we're starting to trend closer to balanced market, all of these property types right now are still trending as a seller's market. Even the semi-detached at 64, we're still in what we consider a seller's market. So that's something to note there. Is there anything you want to add, Santhosh?
No, I think yeah, keep going. Maybe I'll add some stuff at the end. Yeah.
Awesome. Any questions again? Just let us know. We've got a few more people joining in right now. And that's a note too that was interesting from Kreb, is that they pointed that even though demand is easing on the more expensive stuff, and they're not saying just the more expensive stuff overall, but of each category. So that'd be like the higher end of like the semi-detached or the higher end of apartments. That stuff is slowing down right now. But at the same time, the new listings are also easing, and the lower end of the market is still very strong. So if you've got a cheaper detached house like these, we still see them sell pretty quick. So
yeah.
So here we've got a little chart that makes it pretty easy to see when we peaked. So we peaked right around May on the benchmark price. So a lot of people ask us, how much does the market drop? How much is the market going to drop? Yeah. Well, since our peak in May, we dropped by about 3% on the benchmark price. Now, there's also something to consider with that drop of 3%. Is there's some seasonality to this, which last year was not followed. COVID year was kind of an unusual year overall. So yeah, we're looking at about a 3%, and it looks like this drop is slightly easing, although it's hard to tell from only 1 month of data. Yeah, so that's kind of what we're looking at. And we can see also here, right, like the sales are dropping, but the inventory is also dropping as we're getting less new listings on the market.
Yeah, good point. So like we can see there's a 3% drop, but it's also very obvious that the benchmark price is substantially higher compared to last year, right? Compared to last year.
Exactly. Totally
So
right.
when someone comes, or when you think when you're thinking about buying real estate and you're like, I'm going to wait for prices to drop and then I'm going to buy, you're not actually buying when the prices have dropped. You're just buying at a new low, because every time prices go down and they go up, they come back down, but they never quite reach the same bottom that it was previously, right? That's typically not the case. And so just something to keep in mind, that when you're looking to buy, kind of the key is to just buy in whenever you're ready, not necessarily when the market is at its lowest point, or whatever you're looking for.
Especially that it's very hard to time the market. In theory, it works and it's easy, but in practice, by the time that the prices are going up, you're already too late.
Yeah.
That's the reality of it, right? And here we can see, like, if you bought right in May, yes, you've lost 3%, but you've also got a return in that meantime, which we're going to be talking about a little later on.
Yeah.
But if you bought anywhere before that, like let's say you bought in January, which was still considered a hot market, well, you're still above that today. So that's really something to consider, right? So when does it make sense to wait? We did allude to that a little bit. A quote I really like is buy real estate and wait. Don't wait to buy real estate. That is usually true. But we'll talk about a few of the reasons why you might want to wait in some markets, in some situations, and why you wouldn't want to wait. So a few things to consider. First thing is how to find out if it makes more sense to wait or buy is to calculate what you expect your ROI to be on the property on leverage. The reason for this is your property price changes are also on leverage. You need to compare them equally. So that, for example, if your ROI using your debt, using your leverage is 25% per year, for example, what you would do is take 5% as your ROI and compare what you expect the market to be. So if, for example, you expect the market to go down by 3%, for example, over the next year, well, then if you buy now, you're still going to make an extra 2%. However, if you expect the market to go down by 10% over the next year, then you would actually be losing 5% over if you waited to buy later on. But know that this isn't a perfect scenario, right? This isn't a scenario in which you're able to buy exactly at that bottom of 10%, which is hard to do. It's most of the time you'll miss a bit that market and you might be at 5 at that time and end up in the same situation, right? So it's something to keep in mind. Another consideration that's very much of the moment is the interest rate increases. We are expecting another rate. Most people expect 75 basis point, which would be a 0.75% rate increase in the next 3 weeks, I believe.
Towards the end of October, actually, we're getting close to it. Probably.
Yeah, exactly. A few weeks away, right?
A couple weeks behind.
If you're already pretty close to your qualifying power, waiting for the prices to come down doesn't really make a lot of sense if the rates are expected to go up. Because as the rates go up, they'll eat away your buying power. Then the prices will come down, but not necessarily enough to make up for that, right? So that's a big consideration.
Yeah.
Another thing to consider as well is inflation. Now, inflation, if you project that the price of the home will go down, won't affect you on the actual purchase. However, if you guys are planning on doing flips or BRRRR or any sort of renovations in your property, if those trades are now charging more, and if the construction material and all these things are more expensive, that can eat away from your return on investment as well.
Yeah. But I feel like at the same time, real estate is one of the best hedges against inflation.
It is.
Depending on your timeline, if you're not planning to sell within the next 1 to 2 years, until the interest rate situation starts coming back down and things stabilize, I find that I think it's still perfectly fine to buy real estate and hold on to it, right? Because everything can go up in value, and it's just not possible that your house stays stagnant forever in price. It's going to catch up, right? Because Calgary, we've typically had a pretty cyclical market. So it's only a matter of time. Like now we're kind of going back into the slower kind of season of things. So who knows when the next kind of boom will be, or when things will pick up again. And then, like, yeah, you've made your money. That's when you make your money. So yeah.
It's a very good point, Santhosh, because the strategy that you have matters a lot for this. Because if we're projecting a short-term drop, like right now we saw a 3% drop, right? This is mostly in the short term. So if you're flipping, this is something you need to consider for sure. Because if you're planning to be selling around, that dip, then that's a concern. However, if you're buying to hold, it's much less of a concern, because that previous point inflation, as you mentioned, great edge against inflation to buy real estate and hold it on the long term. And most people are expecting strong inflation for quite a few years to come. If you've got, a 5% inflation or 10%, let's say 10% inflation rate, and your property goes up in value only by, let's say, 5, in a worst case scenario, you're still beating inflation. Because if you've got a debt with 20% down, you're actually making 25%. So you're beating inflation by 15% right there. So that's a big deal. In long term, there's really no indication that prices won't continue to rise, especially for Calgary. We're seeing lots of improvement with our economy. We're seeing net migration that's very strong. We're seeing all sorts of good fundamentals that show that this should be happening. In the short term, no one really knows. But in the medium to long term, it seems to be pretty clear that that's going to continue happening.
Yeah. I agree.
Yep.
Yeah, on that point, we're with investment strategy, flip versus buy and hold. The safer, less riskier way would be obviously to buy and hold. But if flipping is your thing and if that's your primary strategy, you just make sure you run the numbers extra conservatively. Make sure you account for potential future interest rate increases and possibly price drops, right? And remember that when you run your numbers, make sure you give yourself enough time for the house to sell on the market, because things don't sell as quickly as they used to, right? We could provide you with the best marketing in the world. We could do everything we can, but the market sometimes is the market, and it just takes time to sell. So make sure you factor all those things and be very conservative with your numbers, which means you got to get a great price on the buying side. So when you buy, you're getting a good price.
Exactly. Like, just be careful if you're doing a flip, but it's still feasible as long as you've got enough spread and you've got a buffer in case that the prices drop. It's still possible, but you have to be very careful, especially if you're a new flipper. So another thing to consider as well is right now we've seen the inventory drop, which means that even though prices may continue to decline over the next few months, you might also have less options to pick from. Because if we're seeing less new listings on the market, then it reduces your options. So, and I mentioned competition. It may seem counterintuitive that might be a problem if prices are declining, but depending which product you're trying to get or which part of the market, if the inventory continues to decline and you're trying to buy, let's say right now in the lower end of each of those categories, there's still a lot of demand out there. Now, if you're trying to buy in the higher end, that's not going to be a problem. It's something to consider, that not because the prices drop as a whole mean that it's going to be less buzzy for what you're actually trying to buy. And another consideration as well is the rental market. This year in Calgary, we've seen a very strong rental market. Things are renting very easily. Rents are going up.
It went up 25% since January this year.
Exactly.
Yeah. So,
like, we haven't seen this in 8 years, I think, Santhosh.
Yeah.
So that's very important. But the thing is, we don't know how long that's going to continue. The fundamentals seem to suggest that that's going to be the case. But what I'm saying is, if you're closing on a property in 6 months from now, the rental market might not be as good as it is right now. We don't know for sure, right? So that's something to consider as well. And then the last one is the importance of taking action. That's not going to affect everyone the same way, But if you've still yet to buy your first deal, or if it's been a long time you've bought one and you are kind of always finding reasons to not actually make that purchase, that's actually a pretty big deal, right? Like, obviously, you don't want to come in a market that's going to crash. However, if waiting a few months for you means that you're going to delay that even further down the road and not actually take the action, then it doesn't make any sense, especially for buy and hold. It's important to take the action. Just adjust your expectations, adjust your numbers, make sure it still makes sense.
Exactly.
So, yeah.
Yeah, and you got to remember that every month you wait to get into the market, that's time that you're losing where you could be in the market, right? It could be, like in the case of an investment property, it could be a tenant paying down your mortgage every month. And if you just waited 6 months for the market to go down, you just lost 6 months of potential equity buildup, right? And that's 6 months towards your first mortgage term. It just kind of shifts your whole investing journey back, right? Especially if you're a new investor, you're looking to get into your first property. You're just delaying your journey towards your financial freedom or your goal, right? So,
especially as we discussed before, like, waiting for that time may not make sense if you don't time the market right. Because let's say you think that in 6 months it's going to be the bottom. Well, the bottom might actually be in 4 months. It might be in 3. It might be in 20. Like, we don't know for sure, right?
yeah.
And by the time you make the purchase, you might actually be on the way up again. We've seen this happen a lot with the previous downturns, where people are waiting for the absolute bottom, and by the time they buy, they're actually in the boom phase, competing with all the other investors, going over asking, and all the buying fury that we can see in those kind of markets, where right now, you kind of get a bit more opportunity to not be competing as much. So anyway, guys, just something to think about, that even though we think we can time markets, it's often difficult to do, especially in real estate, because it's not like a stock where you can click a button and buy it immediately. You need to find a good property to buy. You need to write an offer, get it accepted. And by the time that all this happens, sometimes you're in a completely different market.
Yeah. Just kind of like a little trend or tip that I've noticed recently with all the interest rate hikes is the best time to kind of buy and shop around with the least competition is the week right before a potential interest rate hike.
Yeah.
Because everyone's waiting for that interest rate hike. No one's throwing in any offers. But if you want to scoop up some good deals or have more room to negotiate without any competition, that would be the time to do it. So.
Yeah, and a lot of people are getting approvals just before the rate hike so that they can lock it over 90 days. So then it gives them time to shop after.
Yeah.
So yeah, we see that happening quite often as well.
Yeah.
Do we have any questions? Does that make any sense?
Yeah, it's time for Q&A. If you want to ask questions, please make sure you go to streamyard.com/Facebook and give it permission so that we can see who you are. If not, it's just going to show up as Facebook.
Otherwise, you'll just be an unknown person.
Exactly.
Let's have a look.
Yeah, questions, anything about market, anything that you're concerned about, anything you're noticing.
Okay, well, it must be making sense to everyone then.
Yeah.
Awesome. Well, feel free that you'll see that the posting will stay up on the Facebook page. So if you have any questions that you're thinking of later on, feel free to post them on there as well, and we'll jump in and answer those. So.
Exactly.
Awesome. Well, thanks for joining. And again, reach out to us if you need any help to look for a new property, sell a property, or if you have questions about the market, we'll be happy to help you out.
Yeah, we'll be back next week with a different topic. So yeah, stay tuned. We'll be posting that.
Same day, same time.
Same date, same time. Yeah. All right. Goodbye.